learners, my name is Brenda, and I'm going to take you through financial reports for different entities, and we are going to use the financial statements. So let's write. We have the financial reports of different entities. So our financial reports, we record them from different statements. We have income statement, and the statements of financial position. Yeah. So for today, we are going to start with income statement for a sole trader. So a sole trader is an entrepreneur basically, and the income statement and the statement of financial position, they have different formats. Now we will write the income statement formats. And here we have the debit and the credit side. Now to start with, we are going to start with sales. So our sales, we credit our sales. Yeah. Then maybe we have returns inwards. We put our return inwards here. We put it here. So we are going to less our return inwards. From the sales to get our net sales. So here we are going to less, and as an accountant, when you less, we put in the brackets. So we get our net sales. Now, in our next step, we are going to get the cost of sales, or cost of goods sold, the cost of these sales. Now, we are going to get our purchases. Here our purchases. Right here on the debit side. Then we get our return our purchases. When we add, then we add our opening stock. The stock we started with on our business. Then we add our carriage inwards. From the purchases. The cost we incurred when bringing the goods into our business. That is our carriage inwards. We add it here. Then we will add our, let's say we had some purchases that we bought but we did not like the items. So they are our purchase returns. So we will less them from purchase returns. We will less we will less to get our net purchases. Purchase returns there. Then we will include our closing stock. We will less our closing stock. We less closing stock. Our closing stock over here, we less. So from this, from our cost of sales, we are going to get our right answer over here, which is our cost of sales. Yeah, our cost of sales. Put it here. So this one, we will less our net sales, we less our cost of sales. Our cost of sales we will get here. This one we call it net. No, we call it our gross profit. Sorry. Our gross profit. So this one here is our gross profit. Now we will add in the income. Let's say we have discounts received. We also have interest received. Yeah, we add it to our net, our gross profit. Now over here we are going to find our expenses. So we will less our expenses. We have maybe, let's say we have a car which depreciated. So our depreciation will become our expense. We will debit that. Then we have maybe water bills, water expenses, motor vehicle expenses, we will put all of them here. Then the addition of this we will less. We less our expenses over here. Expenses. We less. We will get our net profit. So we will get our net profit over here. So this is just the format of an income statement of a sole trader. And don't forget to put in the details, the heading over here. Yeah, don't forget to put in the heading. And this will be, let's say, we have JASTON Enterprise, income statement for the year ended 31st December 2022. So this will be our heading, and yeah, this will be our heading. We have the debit and credit side. We have the sales, the returns inwards, the net sales, the cost of sales. Now, let's say we incurred costs when delivering the goods to customers. The carriage outward. our carriage outward will become our expense. So we will include it in our expenses. Carriage inwards will be included in the sales. No, sorry, in the cost of sales. Carriage inwards, we are carrying goods into the business, so it will be included in the carriage inwards in the cost of sales. So that is basically our format, and we are going to do a question. Yeah, we are going to do a question, and okay, this question comes from a council paper, November 2016. Yeah, November 2016, and we have our question here. It reads, the following trial balance was extracted from the books of Jessica Pendo as at 31st October 2016. We have the shillings quoted in thousands. We have motor vehicles at a cost, equipment at cost, furniture and fittings at cost, inventory as at November 2015, which is our opening inventory. We have our accounts receivable and accounts payable, accumulated depreciation on 1st November 2015. We have motor vehicle, equipment, furniture and fittings, capital, drawings, cash at bank, cash in hand, returns inward and returns outwards, carriage inwards, carriage outwards, sundry expenses, office expenses, insurance, wages and salaries, rent, telephone expenses, motor vehicle expenses, purchases and sales. Then we have our additional information. Inventory as at 31st October 2016 was 212,000. A customer, note 2, a customer who owed Jessica Pendo 2.3 million was declared bankrupt. Note 3, an allowance for doubtful debts of 2% is to be created. Note 4, the assets are depreciated on a straight line basis on the following rates per annum. We have the motor vehicles 25%, equipment at 20%, furniture and fittings at 10%. Note 5, insurance prepaid as at 31st October 2016 was 576,000. Note 6, wages and salaries accruing as at 31st October 2016 was 3 million. Required: A, income statement for the year ended 31st October 2016. Then we have note B, statement of financial position as at 31st October 2016. Now that is our question, and we are going to do it right here. And yeah, so you will have to make some space for the additional information so that you can interpret them and calculate them. So our calculation will do it here. And additional information 1 tells us inventory, the closing inventory was 268,212. So we are going to do our calculations here. Calculations. And note 1, we have the inventory. Inventory, that is our closing inventory. We are given in 212. Make the zeros simpler. There. Then note 2, it says a customer who owed Jessica Pendo 2.3 million was declared bankrupt. So this means our customer over here, the sales had been made. our sales, which we were given. The sales we are given is 764,430. So we are going to less the debt. This was debt that the customer owed us, or owed Jessica Pendo, and we are going to less from the sales because the customer was declared bankrupt. So we have the provision. Okay, provision, not two, provision for bad debts. And we have our bad debts debt over here from the customer. We have 2,300 right there. This is our bad debt that we've gotten from the customer. Now we have the provision for doubtful debts. I don't know if you can see it from our question. No, we don't have any. Now that we don't have any, we will put this as our bad debt. So okay, let's head on to note 3. Note 3 says an allowance for doubtful debts of 12% is to be created. So we are going to create an allowance for bad debts. So this is our bad debts. Yeah, this is our bad debts. Sorry for this. Sorry for that. Our bad debt is here. Note 3. Provision for doubtful debts. Provision for doubtful debts we have at 2%. So that means it's 2% of the okay, so we are going to 2% of the debts, of the total debts. So it will be an allowance for doubtful debts is to be created. So what we do, okay, provision of our of our doubtful debts will be 2% of 2,300. Okay, so here what we do, let us remove the bad debts. Sorry for that. So the doubtful debts, we are getting them from the accounts receivable. So in our accounts receivable, we are going to take 2% of our accounts receivable, which is 114,300. Okay, so we have 114,300, 2%. Yeah, so this one, So we are going to do 114 over here. Then you are going to calculate. Sorry, we're going to calculate over here and get our answers. 2% of 114, 300. So we will get 22 2240. We are going to get our answer right there. Then we go on to the next note. Note number 4. We are told the assets are depreciated on a straight line basis at the following rates per annum. So we have our motor vehicle depreciation on motor vehicle is 25%. So we take 25% of the total cost, and our cost of motor vehicle, we've seen it's our cost of motor vehicle is 16,950. So we'll get our answer. Then we have equipment. The depreciation of equipment is 20%. Our cost is 20. 10. We'll do our calculations. Then we will have furniture and fittings. Depreciation of furniture and fittings at 10%. Let's confirm. 10%, yes. And the cost of furniture and fittings is 2,400. We will get our answer over here. So depreciations on motor vehicle will be 4237.5. Then depreciation on equipment will be 4002. Then depreciation on furniture and fittings will be 24. So this is our depreciation. Then we head on to notes. We head on to note 5. We have insurance prepaid. Okay, so insurance prepaid is at 31st October 2016 was 576,000. So note 5, we have insurance, and this is a prepayment. Okay, so prepayments we less, accruals we add. So this is a prepayment of 576,000, and we take our initial insurance that we had, which is 2976. Then we have the prepaid one, the prepaid insurance 576. So we will come here, we less 576. So prepayment we less, accruals we add. Take note of that, and we will get our answer. So we will get then when we less, we will get 2400, which is our insurance, the remaining the insurance that we have. Now we will head on to note 6, wages and salaries. We are told wages and salaries accrued as at 31st October 2016 was 3 million. Now our note 6 here will be salaries and wages. Salaries and wages. They accrued. That means we will add accrued. So our salaries and wages, we will take the one in our trial balance, which is 117,000. Then we add the one we've been given, which is 3 million. We've noted our zeros there. So we are going to have we're going to have we are going to have 112,000. So this is our calculations that we've made, and you are going to transfer these ones, our calculations, to our income statement. So we are going to make our income statement over here. We are going to make our income statement for Jessica Pendo, and yes, so we have the sales for Jessica Pendo. We have the sales, which is working number we have 1167, 870, 1167, 870, that is our sales. Then we don't have the return inwards. So this one we will not put it. Then we just remove it. Return inwards, we don't have. So our sales will remain our net sales. Yes, then we will go to our less cost of sales. Here we have our opening inventory, which is 217,230. Then we add the purchases. We add our purchase. Let me just complete adding this here. Format. Yes, we have our purchases over here. which is 764 for 30. We also have return outwards, return outwards. This one we less return outwards, which is 3720. 3720. So from lessing this one, we get 760. 21 to that. 21 to that. Then we less this 260. 710. 710. Now we are going to add our carriage inwards. Our carriage inwards. Let me just do it here. 21 to 30. Add carriage inwards. Carriage inwards. Which is 2280. 2280. Then we less our closing stock. Closing stock or closing inventory, which is 712008. 712008. Now here we will get sorry for this, sorry for that. So we will less our closing stock, which is 268 212. Then we less cost of sales, that is opening inventory, add purchases, then we less returns outwards, we add carriage inwards, then we less closing inventory. We will get 712,008, which is our cost of sales, which we are going to deduct it from our sales, and we will get our gross. We will get our gross profit. Gross profit here, which is 455,862. Yeah. So that one will be our gross profit. And remember, we had expenses. So we will write our expenses here. Expenses. Closing inventory. We have working number 1. Yeah. So we have our expenses here. And our expenses, we have the bad debts, which we incurred in note 2, bad debts. Bad debts. Working number 2, which we incurred 2,300. Then we also have our allowance for doubtful debts. Working number, yes, working number 3. Allowance for doubtful debts. which we have, and we had 2240, 2240, working number 3, 2240 over here. We also have depreciation. Depreciation, that is on motor vehicle. We had 42, 37.5. Then on equipment, depreciation on equipment, we had 4002. Then furniture and fittings, depreciation on furniture and fittings, we had furniture and fittings, we had 24. Then we also had repayments, and that is insurance. We had insurance is an expense, insurance, which is 2,400. We also have wages and salaries, wages and salaries. We have wages and salaries, which is 120,000. We have a limited space over here, so we'll work it from this side. Find some space here. We have the debit and the credit side. We are still on the expenses, and on our expenses, we have salaries and wages. We also have carriage inwards, carriage inwards, which is we included our carriage inwards here. This should be our carriage outwards. Now our carriage outwards is 8550. Yes, 8550. We also have sundry expenses, and office expenses. Of the sundry expenses, which has a cost of 648. And our office expenses has 2235. We have rent. We also have rent, which is 24,600 from the trial balance. We also have telephone expenses, expenses, which is 2040. Motor vehicle expenses, motor vehicle expenses, which is 4470. Now we will add all our expenses, all of our expenses we have, and the answer we get here, we will less our gross profit. We will get 177,962.5. Yes, so we will get 177,962.5, which is our expenses, all the total expenses. Then we will less them from the gross profit. So our answer will be 277,899.5. So this one we will call it the net profit. So my wonderful students, this is how we work it out, the income statement of a sole trader. And we find the sales, we find the cost of sales, the expenses. So we take the sales, we less the cost of sales to get the gross profit. Then we take our gross profit over here, we add all the expenses together, then we subtract them from the gross profit, we find our net profit. So thank you, my great students, for listening and for being active in the class. So we will meet in our other class. Thank you.